500 as we get ready to trade February week 1 and those very first trading days of a new month. Sometimes these can be surprisingly bullish, but we are obviously in a sell-off because we closed our week and our month of January down below the 50-day simple moving average, and we haven't seen something like that, a daily close, let alone a weekly and a monthly close below it in a long time. This is an intraday view of Friday. We came in, we formed our initial balance period. Going into the European close, we dropped below the initial balance low, and then the rest of the day we could not regain back inside of it. So the flip side of a typically bullish day where we make our initial balance period, rally up through it, and then the rest of the day, that initial balance high is our support. Well, this was the opposite. Turn that upside down, and the initial balance low was resistance. And then that final insult at the end of the day where we couldn't gain it, rolled over, and in the final minutes even losing that 50-day simple moving average. Taking a look at our roadmap. If we are going to have any kind of a sort of inside or sort of a dead cat bounce day like we had on Thursday after Wednesday's big sell-off, let's just sort of look again at the behavior that we saw on Wednesday. We would come in, maybe a little bit above the close, so a small gap up open, and work our way towards the high from Friday, but not take it out, and sort of meander inside the upper half of the range from Friday. And if that were to follow through on Tuesday to the upside, that would break this pattern. But if it follows through to the downside, that sort of repeats this pattern once again. And to the downside, we would come down and break the 50-day once again and break below Friday's low. And most likely, I think we would be aiming at the very minimum to fill this gap to the November close. I think that's probably the next move, and see what buyers think there. If we close below the December low, that puts us over here on our other daily chart. That puts us here inside the measured move box to the downside of doubling down December's range. So if we fill that gap, break below the December low and fill the gap to November's close over here and settle inside of this gap, I think we'll go, inside of this box, I think we're going to go ahead and go for our measured move target. That would take us all the way down to the low 3,500s, down to about 3,506. And that would be 9.4% of a clip off of this all-time high that we made in the final week of January. We look back to these last two drops here that we took. The one off the September all-time high, we dropped 10.5% to get down to the September low. And from the October high, we dropped 8.9%. That October high and that September high would be inside this blue box. We would be breaking below those levels to fulfill this measured move target. And we would be breaking outside of the fork and below the 100-day simple moving average. If there is something far bigger coming our way, then obviously we are going to be going on for something that would be more of about doubling this double down move. You can sort of see that if we took this box and doubled it as well, it would get us down to test the 200-day simple moving average. So that's food for thought. But first, let's just focus on getting into this box by breaking below the December low and filling the gap to the November close. And once again, when we look at the roadmap, that really is our next sort of intraday target that we would be shooting for. If we, and we could be doing this on Tuesday if we skip this whole dead can't bounce game altogether and just break down to start off a new month. But sometimes to start off a new month, we do see some bullishness, we do see some buying. And it just all depends if we're going to repeat this pattern that we saw Wednesday, Thursday, Friday, or if we're going to break this pattern and continue up, or just blow it off altogether and just continue right down to fill this gap. That would be 36.21. That would be the target for Monday, if not a little lower. Okay, have a great rest of your weekend. I hope this video helped you out and kept you calm about where we are going and what lies ahead as we start off a new month of trading on the S&P 500. Oh, by the way, over the weekend, I watched Saturday Night Live last night, and I usually only watch it through Weekend Update, and then I get bored and I go back to what else I was doing, or I just go to sleep because I'm getting old and I can't stay up that late anymore. But 3 sketches through Weekend Update talked about the GameStop short. Can you believe that? It's like made it into the first 3 sketches on SNL over the weekend. So that's kind of crazy. That might be a very bearish signal for the overall market. That and the fact that Citron Research is no longer going to publish any short side research. So a lot of people see that kind of stuff as top calling. It could be the start of a really major move, and maybe that's the reason why we could wind up in the end all the way down at that 200-day simple moving average before the dust settles on this move. Okay, have a great rest of your Sunday. As always, good luck and good trading.